Nationwide, the average cost of car insurance rose 26%. According to Bankrate in the Empire State, the average annual premium is over $3,800. This is about 4.8% of most New Yorkers' income. So why are rates climbing and how can you cut costs? Well, I took these questions to the insurance experts.
We're in a hard market in the insurance world.
The cost for auto insurance up for a variety of reasons, and one expert in Buffalo says they have a lot to do with inflation and supply chain.
Insurers are working to become profitable by turning off the flow of new business into their company, and they're working with the states who regulate the rates that they charge to be able to charge consumers more. So while they're sort of readjusting and finding their way to profitability, the consumer is kind of in a tough spot because there's fewer options.
Additionally, New York is one of 12 states that is a no-fault state. This means each party must typically first file a claim with their own car insurance to help cover any medical expenses after an accident, regardless of who caused the crash. Drivers in a no-fault state are typically required to carry a certain amount of personal injury protection to help cover these medical costs. So here are some tips that can help you save some money. Taking a defensive driving course, having low mileage, meaning driving anywhere under 7,500 or 8,000 miles per year, paying your insurance in full instead of monthly. Decreasing your deductibles can make a notable impact, as well as good student grades. So this is a student making good grades or your child making good grades themselves, at least about a B average. According to Trusted Choice Agent Toolkit, climate change made 2022 one of the costliest years on record for natural disasters, with more than $120 billion in insured losses. This was also significantly higher than the previous 5-year insured loss average of $97 billion.
Whether it's like hail in Michigan or Wisconsin or a tornado in somewhere that's not used to that kind of thing, there's a lot of like new weather patterns that are making insurers like really have to reevaluate some of these marketplaces, because where there was no threat of really catastrophic property damage before, now there is.